Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from chartsandmarkets.com runs down the major markets. The Dow had an amazing run last week, but did it continue? Ross checks that out, along with gold, crude, and the U.S. and Canadian dollars. Veteran trader Victor Adair joins us from Vancouver Island. We ask him if the reign of the U.S. dollar is over, did central bank measures affect the stock markets, and what kind of an impact a proposed gold-backed currency could have. One of Canada's top all-time real estate agents, Allan Angell, joins us from West Vancouver to chat high-end property, what's hot and what's not. We also have a company showcase update from RecycLiCo CEO Zarko Meseldzija at the end of the show. We'll talk to Ross Clark right after this.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark from chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. You can find him on Twitter at Charts by Ross. Welcome back to This Week in Money.
Good to be with you, Jim.
The Dow Jones had a tremendous charge. How long did that last?
Well, you had a nice 10-day run here. Not as big as we used to have some back in the heyday 2 and 3 years ago when things really broke out and ran. But hey, this wasn't bad. We went from 3,400 or 34,000 up to 3,550. We've now taken a pause for a day and a half, and guess what? This market just seems to have enough power underneath it. It's the rotation that's going on that really is helping things out. It was the FANGs that drove the market for the first half of the year, and they took a couple of pauses along the way. And here's a week where the big eight, the big seven or big eight stocks had a fabulous week. I mean, on the day, these things are up 3, 4, 5%. After taking a pause, you've got new highs for Apple, which tends to help this market along. The second biggest one in there, Microsoft, still going through a bit of a pause. But overall, this trend's got a lot of money behind it that's still on the sidelines and ready to come in on any small breaks, and that's all that we've been having. And typically over the years, I used to look at tests of moving averages. You would typically have 2 or 3 tests of a short-term moving average, and then you'd move to the deeper ones. So you'd get tests of the 20-day average. Then the market would either move exponentially up, or you'd have these deeper corrections to the 50-day. Well, right now all we're doing is seeing the really strong stocks are, even though they're getting way ahead of themselves, the pauses are just enough to catch up for the 20-day moving average to catch up, kiss the price. Sometimes you get the relative strength index back down under 60. And in a bull market, you're not going to look for a low relative strength number. You're just going to look for a neutral one. Anything in the 50s is one that you want to be looking to be a buyer of. And we saw a number of those happening during this week. You're also seeing some of the where the Reddit stocks a year and a half ago were the big ones on the upside. We've got a whole new group of ones in terms of the EV market and some of the technology stocks, the juniors that have been running, like we had seen in the big names like NVIDIA earlier this year. Junior names are now starting to do the same thing. So there's hot money out there that's willing to chase the moves, and you've just got to be watching to see if the corrections hold, trend stays in place, and don't fight it until, typically you've got a bit of a rolling top, and you can see that you've had a good resistance level. It's been tested, it's failing, and starting to roll. That's when you think about, the short side. But for now, the trend in terms of general equities is to the upside.
What's going on with crude?
Crude, we've been playing and thinking that the 20-week moving average was going to be resistance as it moved down. That was in play up until 2 weeks ago, at which point we saw the breakout. The relative strength index managed to push through in beyond its neutral territory and to the upside. So at $73, you got that nice breakout in crude, and we're sitting at $80 for now. The stocks are participating in the move, which is good to see. Next upside resistance, I think you want to be looking at the $83 to $84 range, considering that, we topped out in February of a year and a half ago. This market was due to put in a low. It could have been lower into the low 60s, but with the base that's in place now, I think you want to be, this is one of those things that you can look to be a buyer on the dips. Probably anything in the $77 range would be something to take a look at right now. And as I say, as far as the stocks are concerned, if you look at the ETF on the stocks, the XLE, having a nice move, held in exceptionally well in the first quarter of this year, the last quarter of last year, and now starting to show some nice stair-stepping action to the upside. And on the Canadian side, the XEG, there you're seeing the same type of action. Nice little triple bottom in here at the $14 level with a breakout of 14 3/4. It looks as though it's going to have some legs. And once again, if we're seeing some rotation, money that has been moving out of that sector for a while will be probably more than happy to come back in. And when we look at the commitment of traders numbers, we had a buy signal on crude oil a number of months ago, and the price level didn't do anything, but at least it's stabilized, and the positive action we've seen so far, we've not seen a big pickup in the COT numbers, so there's no big caution to be had when you take a look at that. If we were getting large number of speculative positions coming on board and the commercials adding to their shorts, that would be kind of something to be of concern. But right now, there's nothing here in terms of that aspect of it. So, enjoy this trend while it's slowly emerging. I think you've got a reasonable chance of making some money there. The gasoline, you take a look at the gas futures, the seasonal turned bullish back in January, February, and as we mentioned at the time, it just was looking like it was going to be choppy action. Well, just starting to break out at this point. We're around 290 on the gasoline futures, and probably going to see a pretty good push out of here.
Anything happening on the precious metal front?
Yeah, with the Fed this week raising rates a quarter point, that had an effect on a lot of markets. So with the action on precious metals being affected by the currencies, we take a look at the dollar index, which had been down under par. It had rallied to 101 and change. And then since the Fed raised the rates and ended up with commentary that was pretty hawkish, we ended up with the dollar index up around 102. And that put pressure into the precious metals, as you would expect. We had seen the price of gold up testing resistance levels 10 days ago, around the 1980-ish level. And with the high COT numbers that we'd seen in silver, it looked as though it was going to be vulnerable. We did have a pullback, and so I guess we saw, 1940 as far as the low was concerned on gold. I think that this trading range, and you look at it, we've really have gone nowhere in 3 years now. Been stuck since 2020 with that price high of around 2070, and then subsequently with highs around the 2050 level. But that trading range, I think, from the work that we've done, when we look at the other instances where it's had trouble getting through key levels, $75 back in the 70s, then getting through the $200 level, then through 1,000. Each one of those instances looked fairly similar to the price action we've seen in the last 3 years. And so I think this consolidation has probably got one more test of the support. Could be at 1880 or lower. But once we turn the corner, then I think we've got an excellent chance of breaking out on the upside and making the run. And our numbers are quite a bit higher on the upside once we start talking about all-time highs. I think it'll gain a fair amount of steam up there.
What's happening with the U.S. and Canuck bucks?
Well, as I say, the U.S. dollar got a bit of a boost when it came to the Fed. And when we look at the Canadian dollar, a week ago, the Clinton traders numbers were getting pretty close to a sell signal, not quite there. And this week, the dollar took it on the nose a little bit. We closed here down at 75.5, having had trouble getting through the 76 to 76.25 level. There is a large consolidation here from September of last year. And if we were to come back and retest the top end of that, you're probably looking at 75 cents as the important support level as we push through the next couple of weeks here.
Ross, thank you so much for the update.
Always a pleasure, Jim.
My guest has been Ross Clark from chartsandmarkets.com. You can find him on Twitter at ChartsByRoss. Coming up, Victor Adair, next on This Week in Money.
Always consult your investment professional before making any investment decision. Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. My guest is Victor Adair, recently retired from nearly 50 years of being in the brokerage business in British Columbia, but still very active in the markets. He's talking to us from Parksville on Vancouver Island. Welcome back to This Week in Money.
Jim, it's always a pleasure to talk with you. Thank you.
It seems it was Central Bank Week this week with the Fed, the European Central Bank, the Bank of Japan meeting on different days. What impact did they have on the markets?
Yeah, well, I mean, going into the week, or coming into the week, I guess, there was a good chance that it could be pretty dramatic. We have the summer going on, for starters, and so, and people are away from their desks, so they might have had some lack of liquidity. And for the past few years, maybe more than that, what the central banks are doing has just been really important to the markets. Okay, so that's a preface. I mean, to get to the chase, the Fed meeting was scheduled on Wednesday. They raised rates by 25 basis points, as the whole world thought they were going to do, and at the end of the day, there was very little reaction in the markets because the Fed didn't step out of line with what markets had expected. The next day, however, the European Central Bank did kind of shock the markets. Everybody expected they would raise by a quarter. They did, and everybody expected they'd be telling everybody that they're going to raise by another quarter, but they didn't. It seemed like the way the market took it was, well, if things remain so that we need to tighten, we will, but we'll be looking at the data. So the market took that to mean, hey, maybe they're not going to do this. So why that's important is how the markets have been positioning. And for the past several months, the thought has been the European Central Bank is going to be more aggressive than the Fed, and that's one of the things that's put a bid in the euro currency and the Swiss and the British pound as well against the U.S. dollar. So when suddenly it sounds like, hey, maybe they're not going to do that, the euro took a sharp dive, and it bounced back a bit on Friday, but still down on the week. And then on Friday, now this could have been the real wild and crazy one because while inflation has been rising around the world and also rising in Japan, the other central banks have been raising rates to try to counter the rise in inflation. But the Bank of Japan has basically stayed at zero. And the market's been thinking one of these days they're going to get off, they're going to make a change. They're going to actually start to crank up rates. Well, it kind of seemed that they did, but it was not all that dramatic. But anyway, it's, toward the middle of the night, New York time, when they have their meeting, markets are thin. The Japanese yen was all over the map for about an hour or so, and then things settled down. At the end of the week, the yen had basically run up a bit in anticipation of the Bank of Japan doing something dramatic, and it was like a wet firecracker or whatever, and it fizzled out. So that was kind of the impact in the currency markets. Stock markets, not much of an impact. Credit markets, maybe, if anything, credit markets are still thinking the Fed will stay higher for longer, that, they don't suddenly swing from tightening to easing. But, for me, the potential drama that was there just really didn't happen.
Stock markets have been in rally mode this year after trending lower last year. Do you think the leading indices will make new all-time highs this year?
I haven't thought that way, but gee whiz, we're not that far away, and certainly some folks are. We see the flow of money going into the stock market. It keeps coming in. Not as fast, by the way, as money flows into money market funds, which would sort of be almost the antithesis of buying stocks. You put your money in what we would call in Canada a GIC, and that's all you do. There is money flowing into the markets. I think for me the thing that's changing is that certainly for the first several months of this year, the rally was really all about mega cap tech stocks. Those are the things that were going higher. The Apples, Microsofts, Googles of the world, that sort of thing, Tesla. It seems here the past 10 days or so there's been some rotation. That is, put it in a real understandable way, people that have done really well owning those mega cap stocks have probably sold some of them and put money into some other stocks that they think might catch up. So, there's kind of been a rotation. One of the reasons, I guess, that people might be bearish on the stock market, thinking, that this is a bear market rally. As you mentioned, we had stocks trend lower last year, made our lows in October. Since then, we've had the NASDAQ, powered by the big tech stocks, is up close to 50% or so. Like, wow, we've had a hell of a run here. The prospects of, the Fed keeping rates high, that might be a drag in the market. Surely, sooner or later, consumers are going to start to feel the bite of the higher prices, from inflation, and start and spend less money. Surely, at some point, we're going to have a recession. This is the most forecast recession ever, and it hasn't got here yet. And on and on and on. There's been these reasons as to why we're not going to continue the rally, but it's continuing. And part of it, I'm thinking, is as simple as the old Tina reason, and that is there is no alternative. I mean, you say, okay, well, I can put my money into a money market fund and get 5%, which is more than you could have, in the last, 15 years or something. But really, if inflation is running 4 or so%, you're not getting very far ahead and actually given this or that. But it's not such a great thing to do. But I think what's really happening here with the stock market is a bit of the Tina thing. It's going up, and people like to buy things that are going up. some of the economic data we have is kind of mixed. Certainly manufacturing sector is struggling compared to what it had been before. But the consumer, there's an old expression that says, never underestimate the willingness of the American consumer to spend money, whether it's cash that he has or credit that he has available. So consumers seem to be, or consumer sentiment anyway, confidence seems to be reasonably buoyant. The employment figures, I think, are amazing people that they're staying as strong as they are. So, that means like the recession keeps getting pushed deeper into the future. And could we make new all-time highs? Yeah, I certainly think we could. I mean, I've traded the market both from the long side and the short side. I don't have a position on at the moment, so I've got no axe to grind. But, yeah, it looks like we could. I'm not inclined to bet that way, but, it's kind of like don't fight the momentum.
For years, we've heard the expression, don't fight the Fed. That used to mean if the Fed is tightening, people should expect stocks and commodities to trend lower, and vice versa if the Fed is easing monetary policy. Does that expression have a new meaning these days?
Yeah, it does in a way, and I think the way I've understood how it's different is for the past year or so, people have been expecting, even though the Fed, and I mean Fed Chairman Powell has been very clear about this, we do not expect to cut rates this year. It's kind of like, are you hearing me? But the market keeps betting that he's wrong. That like the recession is going to arrive and they're going to have to start lowering interest rates and like that. And I'll tell you what, that's been the wrong thing to do. Anybody that put on that trade, I'm being presumptuous when I say that, but you get the idea. Anybody who did that trade expecting that the Fed was going to have to cut rates, and so therefore they've gone out and say bought the bond market or bought the forward strip on short rates, have lost money. So when the Fed says we are going to stay higher for longer, we don't anticipate cutting rates. The markets I think kind of come around to believing them, although certainly. Mr. Market, as Benjamin Graham used to call him, that's like sort of the shorthand for market psychology. Mr. Market wants the Fed to cut rates because it's sort of, in their mind, it's the green light special. When the Fed is cutting rates, baby, you buy stocks and they go up. Well, of course, there's always that thing about this time it's different. So anyway, yes, don't fight the Fed has changed, I think, and it's like people are almost trying to front-run the Fed. Even though the Fed says, we're not going to cut rates, the market says, we know you will, and, they've been wrong.
The U.S. dollar index has been trending lower since it made 20-year highs last September. Many analysts believe the dollar's reign as the world's reserve currency is ending. What do you think?
I don't think so, just to put it bluntly. I've traded currencies for nearly 50 years, and there's been many times over that period of time that there's been, like a push to say, okay, the dollar isn't worth the paper it's printed on, and so on and so on. And largely, I mean, that may be true, by the way, but relative to other currencies, and I guess this is the thing, the price of gold is now trading nearly around $2,000, and years ago, made a high at $850. So in a way, the gold price has gone up a lot against the U.S. dollar. But in the world of currency trading, it's the dollar against another currency, or another currency against a third currency. We could trade the relationship between the euro currency and the British pound, for instance, or the Australian dollar and the Japanese yen. Whether or not the dollar, you'd think, okay, at some point, maybe something is going to come along and replace the U.S. dollar. I mean, the most recent candidate, I guess, was the euro. When the euro came into being about 20-odd years ago, the European economy taken in aggregate was maybe about the same size or bigger than the American economy, and there was all kinds of reasons as to why this new currency was going to be be-all and end-all and replace the U.S. dollar. Clearly, it didn't happen. Although, in my blog, I often refer to the euro as the anti-dollar, because for currency traders, if you don't like the U.S. dollar, sort of the easiest or the first trade that comes to your mind is to buy the euro against the U.S. dollar. So, the anti-dollar in that sense. The U.S. dollar has this position as the world's reserve currency, and some folks could write that they abuse the privilege. And, I suppose across any number of ways of looking at the world, if somebody has privilege, they abuse it. Yeah, okay, so that happens. One of the key ways I look at trading, by the way, is I try to think about what will happen as opposed to what should happen, in my little view of the world, how things should be. We should all be peace, love, and flowers, brother, and get along. Yeah, well, that ain't going to happen either. To come back to the dollar, I think the dollar is so entrenched that it's going to continue to be the world's reserve currency. And the real way I think about currencies, I guess, is that people understand that the purchasing power of the currencies that they use, whether it's pounds or yen or euros or whatnot, or U.S. dollars, is going down. It just, you can't buy as much stuff, whether it's pickles at the supermarket or, a barrel of oil or a new car or whatever, get a hotel room, Everything costs more. And to me, the depreciating value of the currency, or just the fact that you can't buy as much stuff with that same unit of currency as you used to be able to me that's what really is inflation. And yeah, we got that going across all things, so I can understand in some ways why people, buy real estate or bars of gold or barrels of oil or, whatever, try to put their money into real things. And let me add on that list, shares of stock, shares of companies that are doing well. That's also like a hedge against the declining purchasing power of a currency. And that may be another one of the reasons why the stock market's gone up. Anyway, Jimmy, I'm not sure I answered your question, but maybe to get right to the point, no, I don't think the dollar's reign as the reserve currency is going to end anytime soon.
Well, there's talk the so-called BRICS, Brazil, Russia, India, China, South Africa, will bring in some kind of a gold-backed currency on August 22nd. What's that going to do to the worldwide currency markets?
Nothing. Honestly, that's how I feel. I know that sounds kind of cynical maybe, and maybe you think I'm really pro-U.S. dollar. Again, I just trade what I think will happen instead of what I think should happen. This is not the first time I've seen this thing. As I say, I think the euro 20-odd years ago was seen to was going to replace the U.S. dollar. Different central banks around the world increased the percentage of their reserve assets that they held in euros, at the expense of the U.S. dollar. But after a while, that idea kind of fizzled out because at a real practical level, the U.S. dollar comes in handy when you want to buy stuff, and it's also, when there's trouble in the world and people are worried that whatever is going to hit the fan, the first place you want to move your money, there's Switzerland, of course, but Switzerland's small, but America is still the light on the hill in terms of when everything else is looking dark.
The Canadian dollar has been trading in a 4-cent range between 72 and 76 cents American for the past 10 months. Will we ever see the loonie at par with the U.S. dollar again?
Wouldn't we like that? I remember being in Palm Springs back in, I guess, around 2009, and the American economy itself was certainly in a recession mode at that time, and the Canadian dollar was trading at par or above the U.S. dollar. So Palm Springs, relative to other times when the Canadian dollar was cheaper, Palm Springs looked like a hell of a bargain, and there would have been more than one merchant down there that said very plainly, if it wasn't for all you Canadians down here, we'd be struggling. And I think they were struggling anyway. Do I think the Canadian dollar will get back to par with the U.S. dollar? Man, oh man. I guess quick answer is no. But, maybe you say, well, what would it take to get there? I suppose kind of the same thing that happened in, 2007 when the Canadian dollar got above par. We traded to about $1.10. And then again in 2008 we were above par, and 2011 we were above par. So what was the commonality? Real strong commodity market. if we had a surging commodity market, and Canada, is in a colloquial sense is seen as this big basket of commodities, in a free world where the country we've got the rule of law or something. So if you go invest money there, they're not going to steal your investment from you. That would be something that might get the Canadian dollar back to par again. But no, I don't think the Canadian dollar is going back to par anytime soon. And I don't trade on a on a multi-year time horizon. Most of my trading is pretty short term, and Canadian just been kind of dull lately to me. I mean, I look at the correlations that Canada has that are impactful. Certainly, the interest rate relationship with the United States. If Canada was paying significantly higher than the United States in terms of like a GIC or something, that puts a bid into the Canadian dollar. Commodity prices, how the U.S. dollar is doing relative to the rest of the world. So, in this environment, it's like you mentioned moments ago, the U.S. dollar index hit a 20-year high in September, and the Canadian dollar is definitely higher than it was back then. But the euro has gone up a lot more. So has the British pound, the Swiss franc, that sort of thing. Japanese yen's a different story. So, no, I don't see the Canadian dollar going back to par with the U.S. anytime soon. But from a theoretical point of view, what would it get to take it there? Probably a really strong and sustained bull market in commodities.
Yeah, and when you talked about the acceptance of the U.S. dollar around the planet, for hundreds of years after the Roman Empire fell, their money was still good.
Yeah, okay. I didn't know that. Yeah.
Gold has traded above $2,000 3 times in the past 3 years, but has fallen back every time. What would it take for gold to make new all-time highs and then not plummet or fall back?
Well, I mean, let's say top of the list, I suppose, if the Chinese go try to take over Taiwan. I mean, there's one for you. I'll tell you, the U.S. dollar would be bid, and the gold price would be bid. And historically, strong U.S. dollar is kind of toxic for gold. But then from time to time, in what we call a geopolitical event or crisis, which was what China going into Taiwan would certainly be, the U.S. dollar and gold will rise together against other currencies and against other things. The gold price got above 2,000. The first time was in the summer of 2020 when the yield on the 10-year U.S. Treasury dropped to about 0.5%. And I think that was like a 3 or a 5,000-year low in interest rates. So that helped get gold up to a new all-time record. And then we spiked above $2,000 again when the Russians went into Ukraine. And I would say in an order of magnitude, to put this in perspective, the impact on markets of Russia going into Ukraine on the one hand, and on the other hand, China going into Taiwan, the latter would be, 50 times greater than the former. That level of impact, because that would be, holy shit, we're really in trouble now. What would be a non-geopolitical event that would get us above $2,000 and keep us there? No black swan, no exogenous event like a geopolitical crisis. It's going to be monetary policy. I mean, clearly there's debt up the yin-yang around the world. The purchasing power of currencies are depreciating. I would say, on a long enough timeline, it's inevitable that things of intrinsic value like gold or barrels of crude oil, depending if we haven't gone totally electric, but are going to go higher. They have their ups and downs and all that sort of thing, and I can trade the ups and downs, but I think that would be, outside of the dramatic geopolitical event where everybody's just scared to death, a monetary policy that just continues to debase the value of currencies will get gold above 2,000 and keep it there.
West Texas crude hit $130 a barrel after the Russians invaded Ukraine, but couldn't sustain those levels. It has trended lower since last summer, traded below $64 earlier this year, but I see it's climbed back above 80 this week for the first time in 3 months. What do you think is going to happen with crude?
Crude oil, we trade crude oil in the futures markets, and there's obviously a big physical market for crude oil, but in the futures market we can kind of measure who is doing what. And one of the things I pay attention to is the commitment of traders data, and that shows us, for instance, what the commercial accounts are doing. But the interesting thing on crude is that the large speculators in the crude oil market were at about a 10-year low in terms of their bullish positioning in crude oil, let's say within the last month or so. And actually it started the trend a little more bullish. In other words, and again, I'm being general, but just to get the flavor of it. Last year, energy was the hot market. This year, it's been the dog. Okay, this year it's been tech stocks, and energy has been at the back of the bus. I think, and this is a big picture, this is not what's going to happen by Tuesday of next week, but I think that as one of the guys I subscribe to called Doomberg writes, he says, energy is life. Joseph Schachter, who I know you interview frequently on House Street Radio, Joseph really makes the point that the rest of the world, particularly the developing world, the Indias, Pakistans, in a way, the Chinas, Africa, can look at the kind of lifestyle that the G10 countries have, and they want some of that. And then that means they need energy. And the demand from the rest of the world for energy is probably going to outstrip any decline in the demand for energy that we would have in the developed world by, let's say, not using fossil fuels for transportation anymore. And you can imagine, that's a hell of a switch. So, yeah, I think that the bigger picture is that the demand for energy, whether, whatever form, nuclear energy, fossil fuels, wind, solar, hydro, on and on, the demand for energy is just going to continue to increase, and that puts prices higher. So, yeah, I think that's a long term. I mean, you look at maybe the more intermediate term stuff. China, it was all locked down, and then came out of the lockdown. Everybody was anticipated they'd start buying everything that wasn't nailed down. Nope, not happening. You begin to wonder. You can picture anyway that maybe China is choking on all the debt that they have used to build the society that they've built over the last 2 decades. And, maybe they'll have a Japification. How do you say that? Anyway, maybe they'll look like Japan did for 20 years, where they just kind of are stuck in a slow growth, deflationary kind of environment, so it won't be China on the bids. But I think that has hurt. That's one of the things that got crude oil to $64 is like, yikes, are the Chinese going to be buying any more stuff? So, yeah, I think crude oil prices go higher on a longer-term basis. I mean, the whole commodity index here, which is the ones I look at, are heavily weighted with energy prices, or so let's say fossil fuel prices. We're trading at multi-month lows recently, too, and because WTI and other kinds of crude have gone higher the past month or so, that's pulled the whole commodity basket higher. Yeah, I think prices are going higher, but, it's probably going to be a good bumpy road.
You post your trading desk notes at Adair.USD every week. You comment on different markets. You include lots of charts. You write about trades you made, trades you might have made, and often write about how you decide to make a trade. Can you tell our listeners what you expect to post later on?
Yeah, I'll do what I usually do. I do kind of a review of the kind of key markets. Certainly got to talk about what the central banks did and, show how the markets reacted to that. I will talk about the trades that I made. At the end of the week, I post my blog usually on Saturdays. And I'll say, here's what I did this week. I made money on this, lost money on that. And here's some trades that I might make next week, if this and that happens. But and I call that my on my radar section. And from time to time, I talk a little bit, as you say, about how to trade. And an idea that I've been puzzling over this week is to write about what traders call the edge. And, I've read about the edge for a long, long time, and I had always thought it meant one thing, and that was that, you had an edge over somebody else, over other traders. Now, it might be, that you had, say, inside information. And clearly, that in a lot of markets, that's illegal. But still, people, know things that other people don't know. So, like, that would be an edge. Or you're brilliant. You've got a hell of a range of capabilities to be able to analyze things. You really, really know something. I mean, if this is what we call the commercials that are in all of the markets, you have to think that the commercials probably know more about that market than other people. In other words, if you are in the business of raising cattle, and you've done that for, decades, and you know what feed costs are, and you know about this and that and the other thing, you probably know more about where the price of cattle is going than some dentist in Chicago who, takes a shot at the cattle market. Of course, So that's an edge. But I was always kind of puzzled as to just what is an edge. And I've had not an epiphany so much, but I've just had a different way of looking at it. And something I've often written is that I've met a number of really successful traders, and I certainly have read about a lot more. And one of the things that I noticed is they're as different from each other as chalk is from cheese. They've all got different ways of approaching the market and doing what they do and so on, and yet they've all been successful. And I've marveled at that, and I'm beginning to think that what an edge really is somebody who has found a way to participate in the markets that suits them. It works for them, and they make money. They don't trade like anybody else. They don't trade the same markets as anybody else or whatever. They've got a different time horizon. They got a different risk profile. But whatever it is that they're doing works for them, and it produces the results that you want, which is at the end of the period, the day, the month, the year, whatever, they've got more money than they started with because of the way they go about trading. So I'm quite intrigued with that because that is different than thinking that an edge means you've got an edge over somebody else, like something that they don't, or you've got skills that they don't have. When I was a kid, I played in a rock and roll band, and I very quickly discovered that, the guys I was playing with were gifted musicians. I wasn't. That was pretty clear, and it didn't bother me. I just understood that some people had a gift like that. Wayne Gretzky was gifted relative to other hockey players. Yeah, I think that's a given. But, he also worked at it really hard. But he found a way. Remember, he was the guy that decided, he could stand behind the other team's net. They called it his office. And do really well from back there. Nobody'd done that before. Anyway, I don't want to get carried away here, but just to say, that's something I'm thinking about writing, and we'll see how it turns up. And I'll probably have something there on my website this week, and something more, next week.
Victor, thank you so much for being on This Week in Money.
Jim, thanks for indulging me. It's always fun, and you get me thinking when you have me on. Thank you.
My guest has been Victor Adair. Check out his website, VictorAdair.ca. Coming up, Allan, Mark, Angell, next on This Week in Money.
RecycLiCo, making lithium-ion last forever. RecycLiCo's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. RecycLiCo Battery Materials Incorporated trades on the TSX venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit RecycLiCo.com or phone us at 778-574-4444. RecycLiCo, making lithium-ion last forever.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Allan Mark Angell, one of Canada's top realtors. He's sold more than 4,000 properties. Really, Allan, has anybody sold more than you?
Well, guys like Bob Reddy who go into
of course,
the projects, the guys that list these towers with 400 units in them or something, you know what I mean?
Oh, they're cheating.
What Bob and I used to be the top two guys in the lower mainland. John Lee made a little more money But he sold more houses than I did. It used to bother, but then he got into that stuff, and you can't compare. So it's not the guys that list 200 apartments all of a sudden in a couple of days.
Right, but you list the big quality properties. Allan has sold more than 4,000 properties in Canada. He's located in West Vancouver, BC, and online you can find him at the Angell.Group.com. That's spelled Angell Group.com. Welcome back to This Week in Money.
Well, I'm glad to be here. It's been an interesting year.
The company, Angell Hassman, is continuing to expand. Can you tell us a bit about it?
Well, yes, we've been around a long. I mean, I started at. I've had my own company since 1975, but I had a partner there for years, and then him and I split up, and then Malcolm Hassman wanted to be my partner, so we started Angell Hassman in 1976. And it was interesting because everybody said, well, you're going to work where Allan and Malcolm, they're still selling. How are you ever going to be? You're never going to beat them. But now it's the name that's so strong. Angell Hassman is probably the best high-end company in Canada. We have so many people who want to work for us now because they want the high-end name. So we started, the people in West Vancouver, it's so expensive here now to buy, and it's so expensive. I sold a house for $6 million, and this couple offered them $25,000 a month to rent the place. Well, who can afford that? So we decided it was time to expand. So the people in West Vancouver, they go skiing. They go to Blackcrow, Whistler area to ski, or they go to Kelowna. So we started Abbotsford, Port Moody. We just opened in Port Moody a couple weeks ago. White Rock, Langley, and Kelowna. And now we're doing the Whistler group. I'll tell you, the group we're hiring there, I think we're going to have the top office there in a year and a half to 2 years. So it's been fun. It's been a lot of driving. It's been fun. Like one of my last sales I had was in Langley. And because I had my wife's a realtor, had a client that she sold the grandparents, the parents, and the kids. I said, well, we got 20-some guys out in that area. Let's come out there. No, they want to deal with me, so I had to drive out there all the time. But it was a different market out there. It was a house looking for 1.3. I'm not used to that type. And every house we went to was multiple offers on it. It was just 10 offers on the darn thing. And it's not what the market is. It just shows what's going on. So it's been one of the most interesting years I've ever seen. We should have had a huge crash this year because last year was the second worst year ever. My charts go back to 1984, and but no product. We started with the lowest product that I've ever seen. The Lower Mainland, by January, it was the lowest amount of houses that they've ever had for sale, and that's simply because the interest rates have got to be so high. It's changed the whole market completely. But it's been I've enjoyed this. I've enjoyed this expansion because the people are young, they're 25 to 35. They got so much youth and energetic, and I love it. So that's what I'm doing. But I need houses to sell because it's probably the most important time now to have a really good realtor. I've also lived by the same philosophy. If I want a doctor, I want the best. A lawyer, I want the best. Realtor should be the same because the amount of time I spend analyzing the market, I do every single area from Kelowna, White Rock, Langley, all of them. And as I said, and it shocks me because the realtors you deal with, they look at the board stats, which are an indication, but you have to do a lot more. I spend 25 hours a week. The guys I hire now, I tell them, here's what I do, and they're in shock. They've been realtors 12 years, and they've never seen anything like that. And they do a lot more sales, and they thank me for doing that because knowledge has always been king. You got to have the knowledge, and that's where it is. So I'm still enjoying myself immensely because I love these people wanting to work for it. We lost a couple last year when the market gets soft, so they leave, but now they're coming back. So they said, well, we made a mistake, will you take us back? So it's a good time for the company, but it's a tough time for the market conditions the way they are.
Bank of Canada just raised its rate again. Are the ongoing bank rate increases starting to affect buyers of homes?
Oh, that's the worst thing. I mean, you think of it, in 1980, the rates went up twice, from 10 to 20%. Now they're basically gone up 4 times. 4 times in a short time. So that means that a lot of people that qualified. I just had a very large client from one of their kids, and we sold their house. The bank said you can port the mortgage, which means you could transfer the mortgage over, and then the bank changed their mind. You couldn't, so that he could qualify. When he sold his house and bought it, he couldn't qualify. So lucky he's from a very wealthy family, and it was fine. But most people who are in a house right now, they will not be able to qualify probably for the new mortgage they have on their house. So it's going to be a tough time for a long time.
Low inventory seems to be the real estate focus for the first half of this year. What could cause inventory to pick up? And if it does, what could we see in the second half of 2023?
Well, the inventory is the whole key. That's been the biggest thing, because like I had a client that called me the other day. I hadn't talked to him for 8-9 months. He says, I can't believe it. There are multiple offers. And I said, I know. I've been in Langley and Tri-City showing houses, and multiple offers all the time. So it appears the market's really hot. But when you do the stats, like if I look at Tri-City stats right now, and you look at their Tri-City has had 608 solds for the first 6 months of this year. The worst year is 659. So basically, the first 6 months of this year have been the worst ever. Same as the Greater Vancouver area, North Vancouver, White Rock, Vancouver. It's the worst 6 months you've ever seen. But so when I look at the Langley area and Tri-Cities area, because I suppose, how could that be? So that's why I confirmed my stats. I said, because the stats indicate that they're either worse than they've ever been or very close, but they're doing very well. So the product is the key. The inventory start. We had 257 houses in as FAM. Now, when you just go through the second worst year in history, was since the 80s. So the second worst year, normally the inventory just climbs. It goes up to 600 to 650 houses. We started the year at 257. 250 in North Vancouver started at 115. And the Greater Vancouver, 2,582. You think the average for January is 6,600. So we're 4,000 low in inventory to start the year. So what's happened, because there's not enough product, and buyers still need to buy for various reasons, they have to get multiple offers because there's not enough houses to choose from. So the pleasing thing about this is that prices haven't crashed like we expected them to. They've gone down slightly, but they've been holding their own. But now in West Vancouver, we're up to 440 houses, gone from 257, so it's starting to climb. It's still, even at 440 houses, it's still the average is higher than that, and so we're still lower than what the average is. So this market, when more mortgages expire, think 5 years, everybody got a mortgage at 1.5% to 2%. They're going to come up, and all of a sudden there's going to be a lot more houses on the market, because why would you move now if you have a 1.5% mortgage and you got to go into 5.5% or 6%? Nobody the right mind would move. So that's why there's not enough houses on the market, because you don't want to lose your 1.5% and then have to pay close to 6%. So there's not enough product. It's keeping us up. This is eventually going to catch up to us, because all these people that got a 5-year term, they're going to be coming due, every few months there's going to be more than coming due, so there's going to be more houses on the market. So I'm expecting it's going to get harder instead of even easier.
In the early 80s, Vancouver saw a lengthy real estate crash as interest rates doubled from around 10% to 20%. Now, 40 years later, mortgage rates are up almost fourfold from their bottom in late 2021. Is the comparison of these mortgage rate increases a cause for concern now?
Oh, yeah. That's what I talked about. You think that four times, and the mortgages are so much higher now. How are people going to afford, if they got the same house, the same mortgage, and now it's increased 4 times? How are they going to afford the house? This is something that concerns me very much, and homeowners need to be aware of this. They're all thinking, well, maybe rates will calm down. Are you kidding me? I mean, I'm a political. My wife's even worse. She has on the American news from 7:30 in the morning till 10 o'clock at night. We watch all what's going on through the government. We're in for a hell of a mess. States is just going crazy. Our country's the same. I think it's going to be a tough haul. But if you have a really good realtor who really knows, got the pulse on everything, you can soften the blow. But most realtors say, it's market slower, yes. I had an office I opened up at an area that I don't work in. There were 6 guys, and I said, guys, let me ask you some questions here. And I bet I know more about your area than any of you do. When they looked at me, I said, well, what are you talking about? Well, I asked them 6 questions, and none of them had the answer. I said, these 6 questions are probably the most important questions you could ask, and none of you know that's what was going on. This is what, so I've said this, I'm going to send you the stats, here's what you have to do. The realtor is more important now because it is tough. Some people are going to have to sell, and it's going to get harder all the time. So no chance of price is going to skyrocket or anything like that. We just got to get through the tough years.
What percentage of properties in West Vancouver, Canada's priciest postal code, are owned by investors?
Well, that's a tough one. I would guess maximum to 10%, probably 7 to 10%.
So it's real people living in real homes.
Yes, yeah. There's always, with the Chinese and the radiance came, they start to invest. The Chinese would buy and wouldn't sell. The Persians would buy lots to build an expensive house for the Chinese to buy. But we went through that for 2 or 3 years of that. But now it's all changed. The Chinese are now selling, and they never did sell. So they become more doing business more like the normal Canadians do. Canadians, a lot of them got stuck with the lots because I had a couple of lots I sold for one for $7 million, and the properties, and another one on the same street for close to $6 million, and put $500,000 down. And I knew at the time, I said those guys should never have bought those lots. If I was the realtor, I would have told them to walk away from their $500,000 deposit, because I can tell you that the work I do, I know. And sure enough, they bought them to build a house, and the market changed so quickly. They all got stuck. The guy that paid $7 sold it for $5. The guy that paid $5.8 sold it for $4.2. If they had walked away from their deposits, they would have only lost $500,000. And but I knew who the realtors were. It wasn't in their nature or culture to do that, to tell the people to walk away. I had a couple walk away from the $3 million deposit once. And they got it, put up a $1 million. Then they wanted an extension 6 months. I got it up to $3 million, and I gave the $3 million directly to the seller. 6 months closing, and they couldn't close in 6 months. So you never know what is going on, but you need to have a realtor that will tell you that. But even the top realtors boggles me. The guy that's topping Aspen a couple of years ago put out a thing, near record number of sales. We had 683 sales a couple of years ago. And I said to him, 683 sales. The average sales in West Vancouver is 721. We didn't hit an average year. The best year is 1,200, over 1,200. So how was 683 a near record number of sales? But he had such a great year, he just assumed the market was great, but that's misleading information. But if you read that, and he was been the top realtor here for a couple of years, you think, well, okay, well, he must know, so the market's obviously hot, it's time to sell. So you put your house on, it's too high. And this happens all the time. A lot of the top guys put them on too high, and then the market's starting to adjust as it is now. They're going to follow it down. So that great realtor you hired is going to cost you a few $100,000, and it drives me nuts.
If the Chinese are now willing to sell their homes in West Vancouver, is that a sign of tough economic times back on the Chinese mainland?
Well, it's true, it is, but, it hasn't been great there for a long time. I think it's more they've molded and melded into our community in West Vancouver. They got friends here, their neighbors next door, they've lived here forever, and so they've learned how we do business here. And so they're now reason maybe they should do it the same way, because it is amazing the amount of Chinese buyers now compared to how many there were.
Are there ways around Canada's foreign buyer restrictions and taxes?
Not really, no. I mean, you could get a friend to buy the house for you, but I mean, it's got to be someone who's here now. But he's got to put it in his name. It's got to be a family member. But you go to Whistler, and you can still be a foreigner to buy there. That's one of the reasons we're opening up the office there. So the government has changed that. They invite these people in. They come to Canada, and then they stick it to them.
Are there people that own multiple homes in West Vancouver, and are they likely to ignore a severe downturn or crash?
Well, I just lost my best client. He passed away a couple of weeks ago. I met them in my first year, and I said, guys, I'm not really allowed to flip houses. I met Jimmy Patterson. I sold some for him. He says, Allan, you're going to be a very successful realtor. At that time, I could hardly talk. I could hardly say my name. I stuttered so badly. But, I was a very confident type, so I knew I would. So I said, I'm not allowed to flip houses. But I'll tell you the houses that I would buy, and I'll tell you when to sell them. This couple, I did 67 deals with them in my career. 67 deals. No, they didn't move. It's only moved 4 or 5 times, but I said, here's a great investment. These are the ones to buy. I had a Chinese client that came to me who owned a few houses. She looked at it. I looked at the inventory. I said, that's a terrible house. That is a terrible house. We got to unload that one. So I put it on the market. I bought her an offer she was very happy with, and she said, well, I'll take that. I said, no, we're going to wait till tomorrow. She said, why? I said, well, there's a realtor tomorrow that's coming who's very good, so let's wait and see. Well, okay, so the realtor came in the next day. He bought in a higher offer, so she took that. But she's been loyal to me. She says, I can't believe I was prepared to take an offer, and you gave away half your commission. Yes, but you're going to be loyal to me for a long time. It pays off. So you got to give them the right advice. And the trouble with our business, so many realtors are starving to death. Everybody thinks they're doing so well. We're at like 190 houses sold in West Vancouver. There's 682 realtors. So there's so many. I lose probably 15 realtors a year that join the company because I don't. My managing broker hires them, and they're gone in a year because they haven't sold things. But they can't make because it's too tough. So this business, if you do well, this business is great. But it is a tough. You're working 7 days a week. And yes, I mean, my first 8 years, I said to my wife, no kids, nothing, till I'm successful. So 8 years, no holidays, no days off. In 8 years, I was top realtor in Canada. But then I had my kids bang. I joined Capital Golf Club. So I'm one of these guys, I set my goals, and that's what I do. But it's so tough to be that way. And it's so tough to have the stamina, the courage to do that, because you do pay a hell of a price. If I didn't have a realtor as a wife, she would have left me a long time ago, because she couldn't have stood there. I mean, Christmas, we're down upon the desert, 4 hours on the computer on Christmas Day. She says, okay, enough's enough. She sends me to bed every night, because if I don't have an appointment, I'll be at my desk from 9 in the morning until 10 o'clock at night. I put my desk in the eating area of the kitchen because she brings her food, she eats on my desk, and I do too. And that's what I've always done, and I still do it.
Are higher mortgage rates causing people to pay cash for luxury properties?
Well, you would think yes, but how many people have the cash? A lot of the foreign buyers have had the cash. A lot of Canadians too. But yes, it could cause them to pay cash, but the problem is that, the guys that are new to the country will be here 3 or 4 years. They need to establish their credit and keep it going, because if you don't, I've got an offer in a house in LA right now that I can't. I have to refer it to a client down there. I mean, to a realtor down there, and we'll get an offer on it. And now the guy's new in the country. It's a $17 million house, and he's new in the country. He hasn't got any credit in the country at all. He's got $8-9 million to put down, but he needs the balance. Now, it's tough to get a bank to give even though he's got half down, it's still tough to get the bank when you don't know anything about the guy. So there's always you need credit. You need to have credit in the country.
In high-end housing markets, when people can pay cash, is psychology likely to play a role in whether or not they want to spend their money?
Well, it's still, they look at that's where the realtor is like an investment investment banker type. You talk to them and say, this is what I think the market is about to do. Because I look at it, every sale that goes through, and as I said, I can tell you how many sales in White Rock. I can tell you how many sales, in Langley and Kelowna. But because I watch and I take how many houses on the market, you need somebody who does that kind of work so they can tell you, look at all indications are right now it's going to be stable for a while, or when it's going to go down, it's going to go down for 6 to 8 months, a year perhaps. That's what you need to take advice. But the trouble with our business, because there's so many realtors in the business, even if they spent the time to find out the truth, they need to pay their bills, so they're just going to try and get the person to unload the house. Do I think it's a good time to sell? I would sell. Yes, I would sell. I'm thinking of my own place for it right now. Maybe it's time. And so it's, you get older and your life changes. My knees don't go up and down the stairs as well as they used to. So you do. So there are reasons to sell, and it doesn't matter, even the market is it, because if you sell for less, you're buying for less. You just have to get the right price to start with, and your realtor can advise you what's the proper price of the house you're trying to buy.
Earlier this month on This Week in Money, Dr. Mark Faber said people needed to be worth $200 million to be considered wealthy in America. Using this metric, are there a lot of wealthy people in West Vancouver?
Well, there are, because obviously in my business, when we sell houses, there is whether they're worth $200 million or $400 million, but the good news is that the wealthy people, like in West Van, are coming out of the woodwork and they're buying a lot of expensive houses now. There's not a lot of them sold, but they're Caucasian buyers. We didn't have Caucasian buyers buying these houses for a long time. They're all putting their money in the States down there now, but it's changed down. You know what's going on. If you watch the news, you know what's going on down there. It's scary as hell. So a few of them have come out of the woodwork, and they are buying expensive houses.
I'm from the government, and I'm here to help. Can governments do anything to stop a real estate crash in a rising interest rate environment?
Well, that's one of my favorite sayings, too. Ronald Reagan, he said that, because my government experiences, I detest the government beyond belief. I want nobody from the government ever to follow me. I live it by a different philosophy. I believe in every profession, lawyer, doctor, athlete, whatever you are, accountant. There's 2 or 3 who are great, a few good ones, and there's all the rest. People who go to work in the government, they're nice people, but they can't really make a lot of money in the real world, so they go there, they get a steady job and a pension. So basically, our government's run by a bunch of average individuals. They think they have to make changes, and I can't think of anything the government does that has helped anybody at all. In my business, our business is now run by a government, and if I could get them all, I think there's 8 lawyers. Why you have a lawyer running a real estate is beyond me, because they're the last people you want to see. And they make changes every 2 months in our business, and none of them, as far as I'm concerned, have helped at all. It's stripped the heart. I used to have fun with my clients. I said, I'm going to make you buying and selling a house fun and enjoyment. You can't do it now, because even a guy like me is nervous about all these document changes. It's stupid. It's not worthwhile, but it's government people. It's like you're buying a house, Jim. You and your wife are buying a house, and you get an offer on the house, and the owner says, "Oh well, I better have my lawyer check it over." Well, that's the start of all hell breaking. So the lawyer thinks, "Okay, well, even though these documents are done by a lawyer, I'll have to change something to earn my fee. I got to change something." So now you change something, and the other guy says, "Well, I better get my lawyer." So now you got 2 lawyers. The deal has become 10 times as tough to close. We need them for our conveyances, but that's all we need them for. I want to go on the board of lawyers, whatever that is, the discipline, because I'd be the top realtor in Canada. I'd be quite successful. I want to go on that board. I'm going to change all the rules and see how they like it. It drives me crazy.
In a low inventory, low sales market, how important is it for sellers to price their homes right?
Well, extremely. But you see, the tough thing about our business is this. It's always been the same. You're called in to do an appraisal. I was called in to do an appraisal a month and a half ago with a woman I work with in the office. She got the lead. We told the price, and the woman said, "Oh, okay, you got my house." 3 times she told us about that. So all of a sudden, her sister got involved. Well, I know so-and-so. He's one of the top realtors here. And so she said, "Well, you're going to call it a second opinion." So I said to my partner, I said, "Okay, as long as they don't call it so-and-so, we don't have to worry." And sure enough, it was so-and-so. I told them it was a 3738 house, and then all of a sudden, the other guy came up at 45. Now it's been on, and now at Great Street, if we put it on at 399, it was sold straight away. So now the houses are just starting to drop. She'll probably have to take less than she would have if she'd put it on at the right price to start with. That's the danger. Sure, the guy got the house, but the fact of the matter is now he has to justify he'll drop the price a little bit, so it'll always be too high. Now she could sit there for a year, and a house that she should have sold probably in a week or 10 days. I see that all the time. It drives me crazy that people lose money so much. They don't believe you, or they use the wrong realtor. I mean, the biggest loss I've had was a guy gave a house for 8.9. He bought it for 6.2. 2 years here, and that's all he was here for. A year and a half, I bought him 8.9 non-subject. I said, "You better take this because the market's about to crash." And he said, "I got to live 6 months." I said, "Just take this offer, or you're going to lose your shirt." He didn't take it. So sure, the 2 years is up. I sold that house for 4.6. Went from 8.9 to 4.6 because he had 6 months. He should have taken the offer. He probably would have only had find a place to stay for 3 months or something. But they don't pay attention to you, and it's absolutely. I get so upset because, geez, I've been the best realtor here. How could you not believe me?
Is the second half of the year generally a tougher time to sell a home?
Yeah, it's always softer. I mean, springtime's the best because you got to you're probably 70%, 75% of the house have kids, so they put their house on in springtime, hope to sell for June when school's over. They move into the summertime. That's it. The fall is not too bad. Not too bad. I like November too is probably good, but it's not as strong as the springtime. But you see, we're not having a normal year. This market shouldn't have. We're not having the sales, but prices shouldn't have held like they have. So I don't think they're going to start to crash all of a sudden because I don't think these 5-year term guys, enough of them are putting their house on the market yet. So I'm more worried about 8 months from now or something.
In a low inventory, low sales market, do people who must sell their homes set new valuations?
Well, yeah. Again, everybody wants more than the place is worth. But when I spend 25 hours a week on stats, like I look at my sheet here. Here's all the areas I've got here, and I look at them, and I said, okay, I've got 14 sub areas here, and 5 of them have had the worst 6 months in total. So, and you see how many houses on the market. So the other realtors don't do that. They've never been taught how to do this because I used to stutter so badly. I had to find ways that I didn't have to talk so much. I could show them stats. And so it's just the knowledge. But no realtor wants to spend 25 hours a week doing all these areas. I'll be the only one. I tell people, well, if you're in the North Shore, do North and West Van. That's not that much. And once they start it, they stick with it because it works. It gives proper information about what the market is doing.
Are people selling and then buying another home in the same area?
Yes. Yeah, it's still the you have to, you're selling for a reason. If you're selling right now, you're selling for a reason because even maybe your mortgage is on at 4% in there or 5%, so it isn't that much of a jump. Maybe the kids are leaving, they're going away to college somewhere else, and now you're stuck in a 9,000 square foot house, you and your wife. So there's reasons to sell. So those people still will sell. But a lot of people just like to move every few years because they want to change something in their life, in their house.
How are West Vancouver waterfront properties selling?
Well, it's interesting. I checked. This year we have 6. Okay, the average waterfront sales a year in West Vancouver is 17. So we're at 6. So we got a long way to go. But you see, the oceanfronts. I mean, years ago we sold 35 houses, 35 waterfronts in 1 year, the biggest year ever. The biggest year for a while. In 21 we sold 18. But I mean, now we're at the last year we've had 8 or 9, or that's what we've had. You know, they're so expensive, and it's tough with the economy, the dollar being what it's worth, the price of gas. I just can't get over. We went to a place last night to eat. It was just a fish and chip place, and we liked the fish and chips, and we said, my God, we haven't been here for a couple of years. That thing we ordered, we used to be $65. It's now $95. But, you know, the price of everything has gone up so much. And so you just can't afford the things you need to.
How are high-end West Vancouver properties selling?
Well, this year we've sold 4. Okay, the average per year is 9. We've sold 4. We've actually sold 3 on multiple and one a private deal, but we sold it for 32.
Yeah, and what would we consider high end?
Well, I'm talking, when I say high end, I'm talking over 10. Mm-hmm. West Side's done 13 over 10. Their average is 18. So they may hit their average here. My guess is, you know, they might, but they'll probably only have another 3 or 4.
What's happening in the pre-sale market?
Well, we have a few pre-sale people in our company now, and yes, they're still doing the because you have to think about it. The market's not great right now, but you know, it's not. You know, I haven't lost your shirt, so you can still move. You know, so really, you're trading across the board, but the pre-sales, they're still doing them. One of my offices just did 200 of them, but you know, you're thinking that's 3-4 years at least down the way. So hopefully, I'm pretty convinced myself that will be fine. You know, the biggest problem we have with the interest rates. You know, if you're going to 1.5%, then you want to buy, and now you're paying 6%. I mean, you can't afford that, so you have to buy less. So you may have a nicer house than you're able to buy, because to get a new mortgage and qualify, you may not be able to qualify for the same amount. So this interest rates thing, what the government should do is tell the banks, allow them to port the mortgages. The banks and government, and 3 times in my career, the banks have totally screwed up the market. Absolutely screwed up. That's what's happened now. Because if you could take your 2.5% mortgage and transfer it over, people would be moving just like normally. Be a much stronger market. That's what they should do. You have to allow people to port the mortgage.
Mm-hmm. If people are planning on selling, should they be listing now?
Yes. The reason I say that's a hard one to say yes to when the prices have held, okay? And so, but I think they should, because I really believe these 5-year term guys, in the next year, they're going to start a lot more coming on the market. So I think we'll have a lot more product on, so your prices may adjust. So I would get out and buy now instead of waiting till next year, because, I mean, maybe I'm going to be wrong. Nobody can predict the future, but all these people with all these low mortgages, they're all going to come up to be due the next 2-3 years, and they may not qualify. And so I think there's going to be a lot more houses on the market. So lack of inventory, you can still get a reasonable price.
Do you expect a glut of distressed property for sale next year?
Well, it could be. It depends on, as I said, it depends on how many houses come on the market. That's why I don't know when all these 5-year terms are good. Now, if all of a sudden 30% of them came due the next 6 months, it would start then. It may not even start till next year, because you think the 1.5% to 2% were really the last 2 or 3 years. So it's probably going to take 2 years to start having the glut, but you know, it may not. People, you don't know what they're going to do. They all have to make up their own mind, and You know, I mean, owning your house is the most important thing, but it's your life. You don't just buy or sell because you think, oh, maybe it's time to. You want to do. If you enjoy your house, you love it, you keep your house. A lot of people are. The big difference also, fine. My clients are older. You know, a lot of them are older people, and they don't want to go into apartments. So they're trying to set up their house so they can stay in their house instead of having to sell the house. All these guys I golf with, I mean, there's 2 of them I put in an apartment, but all the other guys, the 60, they're all staying in their waterfront house or whatever, and they're happy as hell to stay there. So they've got their house prepared for them to live there. The biggest difficulty you have to watch, though, my clients are getting older. A lot of us are not as smart as we used to be, or not as well. I got one knee. It took me 2 years. Now it's back to the other knee's gone. So it's tough. But what I see, I tell people, sell now. Because you're both sick, you're both not well. I don't want one of you to go, then the other one's stuck living in the house, having to get the house ready for sale, and all the stress he or she's gone through because she lost her spouse. That is the toughest thing of ever to go through. I have to help them out, and I hate seeing that because it brings you to tears. So I like dealing with the older people, and I say, listen, you've got to get settled. I've got one I just love. He trains horses, and it's time he got out of his house. And he's so slow. He says, okay, I'll listen. No, he told me that 5 times, but because he's got to get out. He doesn't need this big house, and I don't know how long he's got, but he could be gone tomorrow. He could be in 2 years. But you got to get settled before you're there. I mean, some other huge, if I told you the guy's name, you'd all know who it is. And he called me 7-8 months ago, said, Allan, I guess you're right, it's time to move into a nice apartment. He said, I'll get my house ready to sell, and I'll call you in 3 weeks. And he didn't call, so I called him, and I talked to him. He had gone into the hospital. So now he's come home, he's so sick, he can't move. So they've had to move somebody into their place to take care of him. So you have to plan your old age when you get to be a certain stage, that's why one of the reasons I'm thinking maybe it's time, because this house that doesn't suit my needs. I would love to have a rancher, but ranchers are hard to find. They don't build enough of them. My dog would love a rancher, and I lived in West Vancouver my whole life. But there's certain areas in North Vancouver, Pemberton Heights, Edgemont. We go to Edgemont for grocery shopping. I would move over there without a problem at all. And everybody thinking I used to have 257 feet on the ocean front. I had 80,000 golf balls in the water. I've been spoiled in my time, but I'm just happy to move there. My dog's happy, my wife's happy, and we can enjoy our life. So I'm not one of these guys, I got to have this big mansion just because of who I am. I said if there's a nice rancher in Edgemont Valley, I'm going to start to look there.
Allan, what's the best way to get a hold of you?
Look at Angell.ca, Angell, Hasman, HASMAN.ca. That'll give you our sites. They'll give you the type of houses we have, give you all the realtors that work there. But the easiest way is my cell number is very easy, 778-888-7474. 888-7474.
Allan, thank you so much for being on This Week in Money.
Thanks, Jim. You take care of yourself. Okay, bye-bye.
My guest has been Allan Mark Angell, one of Canada's top real estate agents. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Victor Adair, and Allan Mark Angell. And thank you for listening. If you have any questions for the show or for our guests, you can send them to info@housestreet.com. Now stand by for a company showcase update from RecycLiCo CEO Zarko Meseldzija. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allan. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. My guest is Zarko Meseldzija. He's the Chief Executive Officer of RecycLiCo. Welcome back to Company Showcase.
Thanks for having me, Jim.
Zarko, very busy times around the office?
Definitely. I mean, it's summertime for many, but we're still working away.
What's the latest project?
Well, actually, I want to talk about, maybe many of you have already seen on our social media, but we had Sandy Munro and Corey Steuben from Munro and Associates visit us at the demonstration plant earlier this month. For those of you who don't know who they are, they run a successful business that focuses on product design, costing, benchmarking, and they service a number of household names across a variety of industries, such as automotive, aerospace, marine, defense, and many others. But I think from where most the general public knows them is, they gained a lot of popularity via their YouTube channel called Munro Live. And if you haven't seen it, it's, on the channel they do various interviews and site visits, but they also are known to tear down a lot of the latest models of electric vehicles. And when you watch those videos, they really don't sugarcoat their opinion on the build of the vehicle, its battery pack, or any other components. And they always talk about where improvements can be made, and the inefficiencies in many of the equipment that they evaluate and tear down. So this, obviously, you can imagine, has attracted the attention of pretty much every automotive OEM, CEO of every automotive company. And because at the end of the day, they want to know, they want to every bit of knowledge in how they can improve their products. Some maybe don't like to hear the truth, but this is enough. I've heard from others that all of these well-known executives from these companies watch their videos and always are trying to learn something. And even myself, I'm always watching some videos and learning from feedback and the market sentiment and what's going on out there. And on their channel themselves, they've actually interviewed, people like Jim Farley, who's the CEO of Ford, RJ, who's the CEO of Rivian, Jagdeep Singh from QuantumScape. And I think most notably, they had Elon Musk on, where that video ended up getting over 3 million views. And Elon himself has even acknowledged that Sandy is a great engineer, and he actually takes his opinion seriously. If you haven't seen, he does quite a thorough teardown of a lot of the Tesla battery packs and just the car itself. So naturally, I think, earlier this month we were all really excited to meet them in their demonstration plant, where I believe we got around an hour and a half of footage. And from their comments, they seemed really impressed with what they saw, which means a lot from a team that visits many other plants and works with some of the top companies in the world. And I've been just kind of anxiously waiting for them to upload it on their YouTube channel for everyone to kind of get a look inside at the real work that RecycLiCo is doing, and bring us some deserved attention from those who don't know and are kind of fall under the nuances of battery recycling and how that's really defined. This video, I think, will show and answer a lot of questions on what is RecycLiCo doing and why it's so important that we're doing what we're doing at this stage. During the visit, actually, and even as we speak now, the demonstration plant has been in operation, full swing, and it's a day and night shift that we have going. And we're continuing to test and optimize our novel and scaled up process, the demonstration plant. So we're testing different black mass materials. And as I've mentioned many times, I think it's better that we do the work and demonstrate the product than talk about the dream. So this is us really doing the tough stuff right now, and I think this is really recognized, right? Because this is the kind of work that impresses the Munro team and many of the other household names that have come visit us and share those same impressions. Because at the end of the day, when we're looking to form these strategic partnerships, you need to show the real thing. You need to be able to validate that the product can be used in battery cells, which we have. You need to validate that battery grade purity. You need to show that you can produce at scaled up quantities. And these are all things, this little checklist that we've been going down and making sure, we're satisfying this due diligence, for the pipeline of strategics that we have evaluating our process. On a final note, I have taken part in a few of these different webinars and conferences where I think black mass has started to become quite standardized, or there's pricing information going out there, or you're starting to see where it's coming from and where companies are tracking the flow of end-of-life batteries. So it's quite interesting to see kind of now coming into like mid-2023 where black mass and what it's all about, how it's priced, where it's coming from, how it's made, is all really starting to get the attention of the Western market, at least. And I think where we were kind of talking and processing black mass material years ago, and I think even now when we talk about the direct production of like battery grade materials like precursor and lithium hydroxide, and the pricing of those materials, which you don't really see in North America or Europe, but in Asia it's quite well known. Again, I think this is another thing where we'll see in the coming years the head start RecycLiCo has and the foresight it has on the market, and where this technology can really go. So I'll leave it there for now, Jim, and looking forward to chatting again soon.
Zarko, for people new to RecycLiCo, what does the company do? Where are you traded, and where can people get more information?
Yeah, RecycLiCo is a battery materials company. It's focused on recycling and upcycling of lithium-ion battery waste materials into the direct production of cathode precursor and lithium products. And you can find more information on us on our website, www.recyclico.com. And we're traded under the ticker symbol AMY on the TSX.V, AMYZF under OTCQB, on the OTCQB, and ID4 on the Frankfurt Stock Exchange, FSC.
Zarko, thank you so much for the update.
Thank you, Jim.
My guest has been Zarko Meseldzija, Chief Executive Officer of RecycLiCo. I'm Jim Goddard. Our conversation took place on July 28th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.